Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique, tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs.
Hello and welcome to this special live copper showcase brought to you by Red Cloud Financial Services. We have a great show lined up for you today. By the way, I'm Mark Bunting, the host of RCTV. We have today 8 CEOs, managing directors, and vice presidents ready to give you presentations on their companies. They'll each go about 8 to 10 minutes, and then after that, we have a Q&A with 4 of our guests. So get your pens and pencils ready. If you still use those, there's going to be a lot of information coming at you, a lot of interesting companies with some fascinating prospects as we move along and focus on copper today. Before we get to our guests and our first presentation, let's bring in Tim Lee, mining analyst at Red Cloud Securities, who is going to give us an overview on the landscape for copper and the current conditions, and also looking out at the fundamentals over the next decade or so. Tim, great to see you. I'll let you take it away.
Thank you, Mark. Yes, we recently put out a report on the copper space that you can access on the Red Cloud Research website, and I'll summarize a few of the kind of highlights from that report here. We believe there is a strong case for copper price appreciation, and now is the time to get positioned. We believe there will be support for higher copper prices in the coming decades as supply lags demand, particularly as there has been underinvestment in new copper capacity, and the global trend toward electrification requires ever more amounts of the red metal. With the lion's share of exploration budgets now focused on extending older known deposits, we believe there could be an opportunity for investors to potentially benefit from more rewarding earlier stage generative exploration. 3 key factors support our thesis for higher copper prices. First, copper concentrate production is set to fall from 2025 to 2032 due to declining ore grades and mine closures. Secondly, there's been a decrease in major copper discoveries, those containing at least 500,000 tons of copper since 1990, only 18 in the last decade. And finally, copper demand could surge due to electric vehicles. Copper used in EVs is projected to double by 2031 to about 6 million tons. Despite a strong start to 2023, copper prices drifted lower through the first half of the year due to a strengthening US dollar, trouble in the global financial sector, sluggish Chinese demand, and a hawkish Fed. Copper prices have averaged $3.91 US per pound year to date, and currently sit a bit over $3.80 per pound. LME warehouse stocks remain low compared to historic levels, but have been building slightly since late July, up about 17% year to date. Conversely, inventories in Shanghai warehouses have eroded over 2023 to just over 40,000 tons, down about 41% this year, helping to prop up prices going into the second half of the year. Recent price weakness is due to a seasonal downturn compounded by a lackluster economic recovery in China. We note that copper has outperformed, however, all other base metals and silver year to date, up about 1.2%. We continue to model copper prices of $4 per pound in our commodity price deck, which is about in line with consensus. While there have been some macro headwinds for copper this year, in the longer term, there are several factors that should support a strong copper price. First, the refined copper market is expected to go into a deficit by 2027. Market intelligence S&P Market Intelligence forecasts a refined copper deficit of 16,000 tons for 2023, along with a forecasted price of $3.92 a pound. The refined market is then expected to swing to surplus until 2027, when a deficit of 279,000 tons is anticipated, with a price of $4.50 per pound. Second, demand is expected to outpace copper concentrate supply. Copper concentrate production from currently operating mines is expected to peak at 19.7 million tons in 2024, before falling at an average annual rate of 1.9% from 2025 to 2032 due to declining ore grades and mine closures, according to S&P Market Intelligence. If proposed copper mine projects are included, then copper concentrate production could potentially meet demand until 2029, at which point the green energy transition would drive copper demand continually higher. Third, as we noted previously, there has been a lack of major copper discoveries in recent years, and this is adding to the looming copper supply gap. We believe junior explorers and developers would be well positioned to capitalize on this looming supply gap if they're able to make a major discovery or define an economic deposit that could be advanced. Finally, the green energy transition is poised to drive copper demand higher. We note that numerous jurisdictions around the world are declaring targets for when all new vehicles sold will be zero-emission vehicles. Canada accelerated its target to 2035. We would expect these targets to be met in large part by the adoption of electric vehicles, which require approximately 3 times more copper than internal combustion engine vehicles. Copper used in vehicles is forecast to surge in the coming decade, essentially doubling to 6 million tons in 2031 as the adoption of EVs and hybrids increases. In summary, while there has been short-term weakening in the copper market, we continue to have a positive longer-term outlook for the metal. There will be strong need for new copper discoveries and projects advancing toward production. Given the strong fundamentals for copper and recent weakness in the equity market for junior explorers and developers, now is a great time to look at companies such as those we have presenting today. And back to you, Mark.
All right, great stuff, Tim. That was an excellent table sitter. I urge our viewers to head over to Red Cloud Securities website, and you can view Tim's entire report. There are all sorts of charts and very interesting factors as he expands on his report, which he gave you in abbreviated fashion just there. Okay, so that's the landscape for copper right now. Let's get to our presenters. We're going to start with Morgan Lekstrom, CEO at Blackwolf Copper and Gold. I see, Morgan, welcome, by the way. I see that you recently completed your maiden resource at Can2 in Alaska, so congratulations on that. I'll get out of your way and let you take it away.
All right. Can you see my, look at that. I have a screen share going on. Well, thanks for hosting us and having us on the presentation. I look forward to discussing the copper supply and the deficits that we see here in the future. But the real thing is how do you benefit from that with Blackwolf? And that's what we're here all to explain about our companies. And one of the key things with Blackwolf, and I'm going to go through this presentation quick because we have a pretty short time, but I'm going to highlight 3 of the main components of why Blackwolf is situated not only in the perfect jurisdiction for this, but with the right investment and the right team in the background. So I always like to say, why Blackwolf? Why any company? And the 3 things we've come up with are our leadership, our rocks, and our strategic investor. Let's start with our strategic investor. Frank Giustra owns 13.4% of this company and is increasing it, as you've seen through some of our SETI filings. Frank invested in this because because Rob McLeod came to him and said, hey, we have Niblack, which we're going to talk about, has a resource on it. But we've got this amazing target at Can2. And that's what you just mentioned earlier about us finishing our maiden drill campaign. Well, we're not quite finished. We're just taking a slight pause and we're going to come back to it. But Frank invested in it because he sees the huge potential of the Golden Triangle. You know, our location of our main project is right across from the Premier Mine. We'll talk about all that here in a minute. But that's about the rocks. So Frank's in there. Frank's a main backer for this. He took $2.5 million in our last financing, which put him up over about 13.4%. and is actively supporting us in the market and as a strategic. Now let's talk about the rocks. Well, what we're all here to talk about is copper. Our Niblack resource is on Tidewater. It has a 6 million ton copper, gold, silver, zinc deposit with 120 million pounds of copper, 350,000 ounces ish of gold, and about 200 million pounds of zinc with about just under 6 million ounces of silver. That is in a position where it has a full resource on it, and we're doing a study, and we can talk about that quickly to see if there's a possibility of using a mill site that is already permitted to be built in conjunction with a bunch of other mills in something called a hub and spoke model to accelerate that into production, to be a part of that copper solution, but on the US side. So where are we? Well, Cantu and Niblack are on the US side, and specifically Cantu is in Alaska on the US side of the Golden Triangle. We call it the Golden Triangle of Alaska. Well, most people haven't heard of that. They've definitely heard of the Golden Triangle if you're an investor in BC and in the Golden Triangle, but that does actually extend into Alaska, and it's very underdiscovered. So that's a main part of the rocks and our leadership. We have Rob McLeod, who is a native to Stewart and Hyder location, family has made massive discoveries in the area, including the Bruce Jack mine, which is named after Bruce McLeod and Jack McLeod. And that's how I met Rob, actually, was through Bruce McLeod. And when you get up there and you see the immense amount of knowledge that Rob has of the area around Stewart, the rocks, the discoveries made by the family, you know you're working with someone that wants to have that has an investment in that community, but also in the geology and making big discoveries around it. Rob's had many big discoveries in his career. So when you couple that with Frank and Rob, and now Andy Bowering coming on our board in the very near future, that's through the Optimum Venture transaction, which we'll quickly talk about. I'm not going to talk about myself because we've got enough heavy hitters in here. I'm just humbled to be the CEO and learning from everyone. So how do we stack up in the triangle? This is always a question. How do I make money on Blackwolf with what you're doing? Well, we're undervalued comparatively to our resource on Niblack and the exploration discovery potential at Cantu and the Harry project. So what's that look like? I'll make this really quick. The Cantu project was discovered by Rob McLeod through this interesting piece of parchment. I would say it's more Indiana Jones kind of style. This was given to him in a bar. They said, have you looked at the Cantu project? And he says, there's nothing there. Flew around it with a helicopter. Boom. There was a 30-meter outcropping vein in the hill of Cantu Mountain. We got people down there to sample it. We were getting an ounce gold, 2,860 grams silver from some of the float, and high percentage of copper, 2 to almost 6% copper. And that made us go, well, wait, hold on. This hasn't been drilled. It's on the Alaska side of the Golden Triangle. We need to drill this. So we just finished a component of our drilling campaign, and we moved our drill over to what we just acquired from Optimum Ventures, which is our Harry project. The reason we acquired this is because with Cantu, we're on one side of Ascot in the Premier mine that's being redeveloped. And on Harry, we're sandwiched right between Scotty Resources and Ascot that has already had drill results. We are drilling there currently, and we're looking to drill another couple thousand meters there and have results out of Harry as well. So the accumulation of catalyst coming from Cantu drilling, coming from Harry, and then coming from this study on how to take Niblack to production as a part of a hub and spoke really gives us that valuation leg up. And as we drive into each one of these models, we're able to create significant value through not only results, but through a strong engineering approach with Niblack as well. So we talk a bit about Niblack. It is a compliant 6 million ton resource. The interesting thing was that when Niblack's had a bit of a history. It's moved through different companies. And when Rob and the team acquired Niblack, it had to be reimagined. It had a resource, but they figured there was no more extensions that could be done to this. There was a PhD student at UBC that had written a paper on it and said, well, I think they look at the geology wrong. And Rob figured that out with them. They smacked some holes into it or drilled some holes into it and had some unbelievable drill intercepts, 77 meters of 0.8% copper, 1.1, almost 1.2 grams gold, silver, percent lead zinc, and then another 44 meters. So they proved that not only is Niblack completely misunderstood, but is highly expandable. So that's our resource on Niblack. We're looking at taking that through this MOU and through phase 1 was just completed. What that means is there are a couple companies. Sorry, this is a brand new slide deck, so we're working through the kinks of it right now. But there's a MOU with Dolly Varden, New Moly, Goliath, and Coast Copper to study using New Moly's fully permitted mill to get out there and start producing off each one of these properties. We will be updating the market on that shortly. And going into phase 2, we're very happy with what we've seen so far. And to speak of very happy, we're very happy with what we're seeing in our core from Can2 as well. We not only hit the zones we wanted to, but we also encountered mineralization and alteration that is porphyry style. So that's just the cherry on top for us. Now that we have the potential expandability there into something large, we're looking at getting the assay results, going back there, getting the assay results from Harry as well. And we're very happy with what we're seeing in that core. To round it out, because I know we're running out of time here, our share structure, we have 108 million shares currently outstanding, fully diluted. That will be 110 once the transaction closes with OPV. Frank's 13.4. Once Andy and Frank and everyone come in with the insiders, we'll own about 30% of the company, 28 to 30% of the company total, which means we're still a very tight held company, well-funded, raised 8.5 in April. That came free trading August 5th, generally traded above issuance significantly until recent. But other than that, we're waiting on catalysts, and we do think this thing could be a rocket ship once we see some catalysts or, a drill core. Happy to answer any questions, and thank you very much for letting us present.
And thank you, Morgan. You had me at Frank Justra. That was a great presentation. Thank you for the slides. You're going to stick around. We're going to be talking to you later. So just take a breath there, and we'll see in just a bit. That is Morgan Lekstrom, CEO, Blackwolf Copper and Gold. Very good. Now, let's move along to Max Tuesley, Managing Director at Culpeo Minerals. Max, good to see you. We've spoken before. This is a company with multiple projects in Chile, including Lana Carina. So, Max, I'll leave it to you.
Yeah, no, thanks very much, Mark, for having me back. I'll get straight into it. Yeah, Calpeo Minerals, we're an Australian company. We're listed on the ASX. We've also got an OTC listing for anyone who might be interested in investing in the North American market. Yeah, as Mark mentioned, we're certainly focused on Chile, the #1 copper producer in the world, and also obviously the highest reserves of copper in the world in Chile as well. In Chile, we've got 4 main projects. We've got the recently announced new acquisition, Fortuna, and the project where we've had a lot of success in our maiden drilling campaign, which is Lana Carina. We've got another project just south of Lana Carina called Quelon, and we've got a project called Las Patacas, which is a little bit further to the north and only about 15 kilometers south of the large Candelaria mine owned by Lundin Mining. So you can see on the map of Chile there where the projects are located. All of the projects are in the coastal belt of Chile. We like the coastal belt. It's low altitude, lots of infrastructure, and obviously lots of exploration success historically in that coastal belt. I don't think we need to dwell too much on Chile, but certainly Chile is the place to look for copper. #1 copper producer, as I mentioned, the largest copper reserves, and obviously well in front of the major competition there, being Congo and Peru and China. So just to get into the projects themselves, Lana Carina, this is the project that we've been drilling over the last 18 months. And from people who've read our announcements, I think you can see that we've had a lot of success at Lana Carina. we've been able to drill some very wide intersections from surface. You can see some of the results there, 257 meters at 1.1% copper equivalent, 173 meters at 1.09% copper equivalent. And you can see some of the other, substantial wide intersections there. Lana Carina is a very interesting project. The ore body outcrops on the surface as a series of breccia pipes that are mineralized. These breccia pipes have been mined historically, both underground and also open cut, with about sort of 2 million tons taken out of there of about 2% copper. And our drilling program has been targeting those outcropping breccia pipes plus the underlying porphyry hosted copper below the breccia pipes. And it's from that porphyry zone that we've seen some of these very wide intersections coming back from. At Lana Carina, we've got quite a number of regional targets as well. We've got mineralisation identified over a strike length of about 3 kilometres, and we're certainly seeing a lot of new drill targets pop up from some of the geochemical and geophysical work we're doing. Just a bit of a zoom in on Lana Carina. So as I mentioned, we've done 13 holes there so far. Lots of good numbers coming back from the drilling to date. The footprint at Lana Carina itself is about 400 by 500 meters in dimension, at least 700 meters deep. And Lana Carina sits within, as I mentioned, that sort of 3 kilometers of very prospective ground. The interesting thing at Lana Carina, as you'll see on the section there, the ore body outcrops as the breccia pipes. We then have that central zone of high grade, very wide copper intersections coming back from the porphyry. And then interestingly, deeper in the system, we're seeing a cupola, which hosts some very, very significant molybdenum grades at depth. These are the equivalent sort of grades as your climax moly mine in the US. So these molybdenum grades are significant. And, it looks like, there could possibly be a deeper economic zone of molybdenum sitting down there below the copper mineralization. And we believe that the cupola indicates that there well may be a deeper porphyry driving this whole system. So that's one of our intentions after we drill a few more of the near surface targets. We certainly will be coming back into Lana Carina and drilling into the deeper moly zone. Regionally, as I mentioned, this is us coming out on the long section there, taking a broader view. You can see the Lana Carina drilling results there. The backdrop to this section is the ground magnetic data. And what we see in the ground magnetic data is a very good correlation between mineralization and the magnetic loads. So you can see there that the drilling is very similar to where the mag low feature is. The mag low feature is in blue. And what we've identified along strike of Lana Carina at Vista, Montana is also a very obvious exploration target there, where we're seeing a very similar mag low feature, only about 100 meters below the surface. So in the next couple of months, we intend to come back to Vista, Montana and drill test some of these, Lana Carina lookalikes along strike of the main mineralization. Just to give you a bit of feel for the new acquisition, we've brought into the portfolio another copper project about 10 kilometers north of Lana Carina. This project is referred to as the Fortuna project. We've announced recently that we've acquired an 80% ownership of Fortuna. There's 4 key target areas there. One of them is drill ready. One of them is referred to as Vaca Muerta, where we see mineralization over about 1 kilometer of strike and about 500 meters wide. At Fortuna, the mineral, it's never been drilled. So we've certainly got some walk-up drill targets there at Fortuna. And then we've got 3 other projects at Fortuna that we will explore. So you can see there a close-up view map just showing Lana Carina in the south of the image, and then 10 kilometres to the north is the larger Fortuna project. As I mentioned, the walk-up drill target there is referred to as Vaca Muerta. Historically, there's been some very wide, high-grade channel samples coming back from Vaca Muerta, 150 metres at 1.31 copper equivalent, 102 metres at 1.25% copper equivalent, 173 metres at 0.86% copper equivalent. So we'll certainly be planning to bring the drill rig back into Vaca Muerta, probably at the same time that we drill test Vista Montana, which will be before the end of the calendar year this year. At Fortuna, there is another 3 projects that are not as advanced as Vaca Muerta, but we certainly will be advancing those with geological mapping, geochemistry and geophysics over the next few months. And we're looking forward to sort of being able to establish some drill targets on those projects as well. And just finally on Fortuna, just a long section through Vaca Muerta, just showing some of those wide historic channel samples on the surface. The ore body outcrops as oxide mineralization, but the zone of oxidation is only about 25 meters deep. And then below that, we've got a sulfide zone that's coming back from some of the underground shafts have exploited that sulfide zone. There's a lot of chalcopyrite, a lot of bornite in the stockpiles on the site. So we're very confident that there's a deeper sulfide zone below what outcrops on the surface there. And the plan with the drilling program is to come up and drill under some of those wide channel sample results. So just concluding, for people who want to invest in copper, I think, Culpeo is certainly a company that you should look at. We've got a very good portfolio of outcropping, high-grade copper targets, located in Chile, the world's #1 copper producer, and a great place to explore. We've got a very experienced exploration team on the ground. We're looking at moving these projects into that resource definition phase, and given the location in the coastal belt, bringing these projects into production is something that a small to medium-sized company like Calpeo can certainly do on our own. And we've got a very good team on the ground, lots of experience in Chile. We've got a very experienced country manager who's a Chilean national. So now we look forward to being able to, start reporting some of the results of the next round of drilling. Thanks very much, Mark.
All right, thank you, Max. So that was excellent. Max Tuesley, he is the managing director at his company, and we have enjoyed hearing from Max on Culpeo Minerals. Moving along, our next guest is Pierre Leveille. He is the president and CEO at Deep South Resources, the gentleman I've also spoken to before. This company owns the Haib project in Namibia. Great to see you, Pierre. We're all set for your presentation, so it's all yours.
Thanks, Mark. I think it's it's a great event to talk about copper. Copper will be the #1 commodity for at least 30 to 50 years, without any doubt. Without copper, you don't have any communication. Without copper, you don't have transportation. You don't have infrastructure. You don't have cloud storage. So it's a very, very important commodity, and we all know that it's the demand will explode. So it's a place to be. Why Deep South? Deep South is mainly with a large project we own 100% of the Haib copper project in Namibia, and we have some greenfield licenses in Zambia, but right in the heart of the copper belt, which is one of the most prolific copper belt in the world. In Namibia, we have a large tonnage, low-grade deposit. We're over 850 million tons at 0.31% copper. So it's about a little bit over 5 billion pounds of copper in the ground. We are starting a feasibility study, so it's a way more advanced project than what we have in Zambia. The most recent PEA was showing an after-tax NPV of $1.3 billion per pound, $1.3 billion US, sorry, with an IRR of 38.1% after tax. That's for a price of copper of $3.50 per pound. Of course, it's a low-grade project. And when we took over the project, we decided to look at the it was considered as a classic porphyry, as what you find in mostly in the Andes. So where you see the grade is fairly even, so you will drill vertical holes to chase tonnage, and that has always been the way that it has been explored in the past by most of the companies, including Rio Tinto and TORQ Resources. And but we've seen and discovered quite a lot of shears and faults that have never been identified before. And when plotting that over the when we were plotting the drilling results from all the companies that were there before us, we were finding that these structures were seemed to control some of the high-grade pods that we were seeing in the drilling. So what we decided to do is to map these structures correctly, and decided to drill incline holes across these structures. And then we were having some extremely good results from 0.40% copper up to 2.57% copper with extensions over 150 meters. So we know that we will increase the grade, the average grade of that project, without any doubt. So the economics are already pretty interesting on this project, and it will just be even better with that drilling program that we will resume pretty soon. We still have another 5,000 meters of drilling to complete on that program. So that's one of the exciting part about the program, about this project. The other thing, which is quite interesting also, is that the way we extract metal. Most of the companies before us were looking at a classical way with grinding, milling, roast leaching, flotation, and grinding and milling are very high power demanding, and that makes that with a low grade project, it makes it difficult. So we've looked at two things: high pressure grinding rollers, HPGR, and we've tested that on the ore of the Hype deposit, and it was reacting extremely well. And without a too high demand and power, we were able to reduce the size of the of the rock or the particles under 5 millimeters. So that's pretty good, because it helps to use other types of technologies to extract the metal, such as heap leaching. We've looked at heap leaching, different technologies that we looked at, and we ended up looking more at bioheap leaching because the ore and the parameters of that project are perfectly suited for that type of leaching. So, and the capex with that type of leaching is 5 times lower than the classical way with grinding and milling and so on. So for a low capex, we then have a pretty sizable NPV. The capex for that NPV is $340 million US. So you can see that it's way lower than it would be with the classical route, which would probably be over $1 billion. The capex would be over $1 billion. So this the test that we have done so far with the HPGR and with the bioheap leaching, it's they gave extremely good result, up to 95% recovery. So now we will look at a combination of the fine material will go with flotation and roast leaching, and the coarse material will go with bioheap leaching. So 62% of the material will go through flotation and roast leaching, and 38% will go with bioheap leaching. So that will make that the cash flow will be in a lot faster, and we will recover certainly over 85 to 90% copper with that technology. What is important here is that there's no new technologies in there. It's just a different blend way of using existing technologies. What is very important also for that project is the leadership. We have Victor Williams, our exploration vice president, is from South Africa. He has 40 years of experience, mainly in Namibia, Botswana, South Africa. He knows that area extremely well. He has been involved time to time over the last 20 years with the HYBE project for different companies as a consultant. But he's with us since we acquired the project in 2017, and he came in with the ideas that was having before. That it's not a classic porphyry. It's different because it's way older than what you find in the Andes. It's 1.8 billion years old. So we are now showing that yes, it's different and it's structurally controlled. The grades are structurally controlled, and that's a major game changer. In Zambia, we have, as I told you, some 3 licenses in the area where we have an option to acquire up to 85%. On one of the projects, we have recently, with soil sampling, identified 10 large copper anomalies and 13 large cobalt anomalies. Of course, it's way more greenfield than what we have in Namibia, but we will keep going on it with a little bit of work this year, soil sampling again and aeromag survey to, define some drilling targets. It's important because all the majors are back in Zambia. They want to have a piece of the action. So there's a lot of activity in Zambia at the moment. So it's important that we keep going slowly with that project. Coming back to Namibia, at the moment we are currently moving forward with a fundraising of up to $2 million. It's nearly fully subscribed, so we're pretty happy of that in that difficult market. And we expect to close everything by the first closing is today, but the second large closing will be in 2 weeks' time. And with that money, we will resume drilling on the HYBE copper project. We will resume also metallurgical work with HPGR and bioheap leaching in Australia. We will start an environmental and social and impact assessment because eventually we will start a feasibility study on the project, and we want to be ready to apply for a mining license. So what you have here is a very large copper deposit that is well advanced, arriving at feasibility stage, with a very good leadership team to develop that project. TORQ Resources is still our largest shareholder with 16% of the shares of the company. And you have a potential, very high potential for new discoveries on HYBE also. It's a very huge area, and it's still, quite underexplored. So there's a lot of upside potential on that project in Namibia, and that's the same in Zambia. It's just by the fact that it's extremely well situated to start, and now that we have some large anomalies, we're heading for potential discoveries there. So we look forward to have a very great year with our 2 projects. Thank you. Then you have a good day.
Thank you very much, Pierre. And I'll tell our viewers that if you'd like to see the presentation for Deep South Resources, just go to their website, deepsouthresources.com, and you can see it there in more expansive detail on what Pierre was talking about. Thanks again, Pierre, and we'll see you a little bit later during our Q&A segment. And now let's get to our next guest. We're talking to Jonathan French. He's Vice President of Capital Markets and External Affairs at Foran Mining. This is a company with more than $1 billion market cap that's been hugely successful the last few years. And I can also tell you, and I understand, Jonathan, that your new role was announced yesterday. In fact, it was formalized. So congratulations on that. We're looking forward to your presentation.
Thank you, Mark. Really appreciate it. Apologies, I thought I was on at 2:20, but happy to go a little bit earlier in the scope here.
Yeah, that's okay. We're all set.
Perfect. Let me just share my screen here. Where? Okay, let's see. All right. Hopefully we can see the screen. Perfect. Well, Thank you very much, Mark, and apologies for the little brief update there. But my name is Jonathan French. I'm VP Capital Markets and External Affairs for Foran Mining. Ticker's FOM on the TSX. We're a $1 billion market cap, and as you can see here, we're looking to build the first zero carbon copper mine in one of the top jurisdictions in the world. So we're looking at Foran. This is probably the most important slide of our deck, and it's really how we vision our ability and our core focus to to maximize risk-adjusted shareholders for return. That risk-adjusted returns for shareholders. That's really our core focus, and it's really a three-pronged approach. And it's first, deliver initial phase production from our McIlvenna Bay mine in Saskatchewan. We put out a feasibility study last year and outlined a 4,200 ton a day operation with an 18-year mine life, producing about 65 million pounds of copper equivalent a year at about $1 all in per pound costs. And as we deliver and delineate our first and initial phase production of 4,200 tons a day, we also will continue to explore during the construction phase. And I think this is something that's very important with most development companies. Oftentimes you need to limit your exploration as you develop, and the typical Lassonde curve kicks in, and we're hoping to buck that trend, and we'll talk about some of the initiatives that we've been doing lately on that. And lastly, to take these and really do it in our net positive strategy, which is trying to deliver and target carbon neutral production, because we think over time it's the right thing to do, and it will lead, we believe it'll lead to superior investment returns for our shareholders. One of the key things that sets Foran apart, I believe, is our shareholder base. We have Fairfax Financial that owns 23% of our stock. That coupled with Pierre Lassonde and our insiders and management, about 41% of our shares are covered by insiders and these two groups. So we're very fortunate to have such a stable and long-term like-minded investors that will participate with us along the growth projections that we see. So just looking at where we're located, McIlvenna Bay is about 65 kilometers west of Flin Flon, Manitoba. Flin Flon, Manitoba has been the heartbeat of MTB Metals and some of their Manitoba operations for the better part of a few decades. And sorry about that. And basically it's the same greenstone belt. And the reason why we're a little bit further along or younger than the MTB side is our deposit is undercover. And sorry about that. Our deposit's undercover. So 65 kilometers west of Manitoba, and basically located along the highways, along power lines, really set up around proper infrastructure. Just talking about geopolitical risk, I think one thing that people forget is that overall, the fact that that the jurisdictional risk is still undervalued in today's market. I think one stat I like to talk about is that if you look at OPEC, the top 13 companies of the world, they really are, or 13 countries, excuse me, incorporate about 40% of global oil production. There's 3 countries in the world that generate 50% of copper's production, being the DRC, Chile, and Peru. And people don't really see the risk with the geopolitical structure globally with that time frame. Looking at Saskatchewan, it's actually number 3 in the world. We're very fortunate to be in a group of community that Saskatchewan's only 1 million people, and we're a close-knit family. And we're very happy to be in this. And I think over time, as we look at the risks with future copper production, a lot of these assets that need to come online to limit the supply-demand imbalance are in these higher risk jurisdictions, which will need higher discount rates, which implies that higher copper prices are going to be needed for some of these assets to come online. And we believe we're going to be in a situation to benefit while these other assets are coming online. Just quickly looking at our permitting and our Indigenous activities, we've recently announced our environmental permits that we've received, as well as the Indigenous collaboration agreement with the Peter Valentine. And this agreement is so important to us because we want to be a group partner and be involved with the communities over time. and really be able to be part of the communities and build a circular economy and emphasize that we're going to be there for multi-decades. Looking at capital intensity, our feasibility study last year had an initial capex of around $370 million Canadian. And if you look at it on a per ton of copper equivalent production, we're in a top quartile capital intensity curve, which makes this really palatable, and ability to get this off the ground is very important. I'm just going through here quickly on the exploration front. This is the second prong. The VMS deposit, these things typically, once they're in production, they double their assets, double their deposit size once they're in production. So that's why getting this off the ground is the most important thing for us. Looking at Tesla, which is one of the discoveries we had early or late last year, it's about 300 meters away from our McIlvenna Bay deposit. We've outlined a 550 meter strike, and we've actually, stay tuned. We have some drill results coming out in the next couple of weeks that could potentially show the size of this conductor. And if you do some simple math around here, there's opportunity for a potential 25 million ton addition, which is essentially the same size of the McIlvenna Bay reserve. So, an 18-year mine life on the reserves, and ample opportunities to expand and grow this asset over time. On other production or other exploration, we're going to be targeting some other conductors nearby Tesla and McIlvenna Bay, and we're really excited to get things moving there later this year. And just lastly, on the net positive, the big key focus here is using hydropower, but we're also going to be using battery electric vehicle fleets and using some other initiatives that haven't been done in mining before to really get towards that carbon neutral and carbon negative opportunity. And I think over time that will lead to multiple expansions, premiums on our concentrate, and really generate extreme or superior returns for our shareholders. And then just lastly, on upcoming catalysts, we're going to be putting out exploration results in the next couple of weeks. And then following that in October, we'll be also updating construction milestones and opportunities there. We recently announced, Mark was mentioning yesterday, the partnering with GMS, G Mining Services, to help us in building the project. And we're really buckling down and getting ready for development here, and looking forward to an exciting end of the year and heading into 2024. So with that, I'll end there. Thank you, Mark.
All right. Thank you, Jonathan. You're clearly also adaptable and flexible. That was my fault. I apologize for throwing you into the mix early there. I mixed up the schedule, so you did a nice job.
Hey, no problem. Sorry, I took someone else's spot.
Yeah, no, not at all. No, we just, we're back on track, so the rest of our guests are not terrified I'll do that again. We're heading on to Libero Copper and Gold now. Thanks again, Jonathan. So we're going to talk to Ian Harris, gentlemen I've had the pleasure of speaking to before. Great to see you, Ian. Off you go.
You too, Mark. Okay, good. This is working. So, one of the big takeaways when you have an event like this, and I think most of the people watching are already big supporters of the overall copper story. And I think one of the big takeaways is looking at the multiple companies that are here and the quality of projects that exist. And it's really a factor that there are very, very, very few development stories in the copper space right now. And it's really getting to the point where there's going to be this major trickle over that happens as it moves towards the equities that are in the development phase, because there really just isn't enough projects out there. And I think that those moments are coming soon, especially as we see large price drops in the cost of electric vehicles. A lot of that is subsidized, but that new demand coming online has to come from future projects. So I won't beat it up too much. Obviously, lots of forward-looking statements. And I would like to, I think, start with pointing out one of the major differentiators between Libero, I think, and many of the companies out there is really having an experience of taking projects into production. I myself am a mining engineer. I have 25 years in the industry. Previously, I was senior vice president and country manager for TORQ Resources and responsible for taking the Mirador project in Ecuador through feasibility, through sale, stayed on board for a year and started the construction of that project. It went on to be the first large-scale mining operation in the history of Ecuador. Ernie Masta, director, also famous for being CEO of Cobre Panama when it was with Inmet and got all the construction permits in place, and it went on to be constructed by First Quantum, become the first large-scale operation in Panama. And the nearest big copper opportunity in Colombia, Macoa project, is actually, those two projects are the closest operating copper mines to that. Also joined by Matt Wonder, our VP of Exploration, who was instrumental in the exploration team at Antamina. Rob Pease discovered and put into production Mount Milligan, which one is the most recent operations in BC, and have a partner with Anglo Asian, which is the biggest mine producer in Azerbaijan, listed in London, but also has that same experience of taking projects and moving them forward into production. And so that is our overall focus. It's looking at a project and wanting to work on projects that have the potential to become future mines. So I'll get right into it. One of our flagship assets, it's amazing to be working in a company that has the quality of assets that we have, but is the Macoa project. It has a resource of over 636 million tons. Contains over 2 million tons of copper. It's one of the larger projects on the planet, and I think for dollars per pound in the ground, probably one of the most undervalued, if not the most undervalued project right now in the world. And it's also a significant moly project, but I'll jump back into that. So that's the background of showing the opportunity that exists in terms of valuation and the potential of this overall project, and an experienced team that has experience taking these types of projects and seeing them all the way through. So the first question is, why Ecuador? Why Colombia? First, it's in that famous copper belt through multiple periods in the Andes Mountains that is seeing the majority of the world's biggest projects. 12 of the 20 largest projects are along that belt. 45% of the production in the world comes out of Peru and Chile. And obviously, it's based on the amount of exploration dollars that have been spent in that area. And we're seeing, Peru used to be probably the 5th or 6th largest producer in the world. Now it's the 2nd largest producer in the world. Ecuador now has the Mirador project operating, and I think has 6 different projects in development. But that luckily those geology does not respect country boundaries, and that same belt, in this case, the Jurassic portion of that belt, goes right into Colombia. And Macoa is a demonstration of the overall potential of that belt in Colombia, and really feel that it's going to be one of the next large developing copper producers in the world for many reasons. The big reason, I think, an important reason, is that Colombia has an allied status that's the same as Japan or Australia. It's the highest allied status without being in NATO, which is very important because of a little thing called the Inflation Reduction Act. And now we're seeing the massive price drops, for example, in Teslas, taking advantage of that act. And a most recent, about a month ago, the inclusion of copper as a strategic metal in the United States. So that means that copper production out of Colombia counts towards those overall credits. And these are huge incentives to move towards electric vehicles and other clean energies in the United States. So you have this onshoring events going on. You have production chains coming back towards the United States, wanting to work with closer allies, and Colombia is well positioned. And on top of that, has a president who's been in place over the last year, who is highly focused on converting from its dependence on oil and coal. About 40 to 60% of all the exports of Colombia are currently coal and oil. And whether it's because of a political decision or because of world requirements, obviously that is not something that will go on forever. And there's a need to diversify the economy of Colombia. And the president has been laser focused on the importance of the energy transition, but also using its minerals in order to reindustrialize the country and have it as a source of driving the economy moving forward. And I think this message is actually lost and not understanding the huge importance that Colombia is putting on that. So looking back at the project, again, it's one of the larger copper deposits in the world. It's also one of the largest undeveloped moly projects in the world. Its resource was based on a $10 per pound moly. I think today it's about $25 a pound. So it's hugely leveraged onto the value of moly as we move forward. And it's a project, and you can see in the circle here, all the little black dots is all the historical drilling on the project, but through geophysics, etc. This Jurassic Porphyry belt is famous for its clustering effect. Mirador had Mirador Norte, Bonanza, San Carlos. Warintza has Warintza East, South, North, multiple targets, and we still have a huge amount of targets. We think that this is a project, although it's open in all directions, it's open at depth, it's open to the north, east, west, south. We continue to grow, even though it's already a huge size. So we're very excited to have this project in our portfolio, and we know that the overall direction that Colombia is going, even testing some of the historical drilling, our one drill hole into the project was one of the best drill results in the last 12 months of any copper project in the world. And at that time, the only better holes were out of Filo de Sol, Warintza, and Eris's MSCA. And that was just a single hole. So what have we been doing? Okay, a project of this size and scale is really bigger than anything that Colombia currently has, although it has a robust mining industry, especially in the gold sector and the coal sector. It's really important, and the lessons learned from developing previous projects, whether it was in Panama or Ecuador, is I like to call it this triangle of extremely strong local strength and real relationships locally, a high focus on developing locally, creating a national reputation, and that is what overall drives the political will. So today, obviously, Colombia is still very politically charged, and we do not want to be the lightning rod in Colombia today. But we've been working with the government in order to use the Macoa project on the back of a overall industrialization plan of Colombia, and have developed a plan together of looking at a early start into the core of Macoa, which has there's a core portion that is over 1% equivalent copper at the center area that actually has a historical pre-feasibility study that has demonstrated that, but also through our same resource, in order to create an alliance together with universities and other producers in the country to help build out a production chain. And this is important because politically, it's a lot easier to support a green energy production chain than saying, I'm coming out and saying I support a large scale copper operation in the country. But this is the overall strategy. We've been suffering a little bit through the instability right now, but history has a way of repeating itself, where there was the story in Ecuador that at one time had suspended all mining in the country for 18 months. And now, look, or lo and behold, the Mirador project is producing copper today. Fruta del Norte is also a very large operation within the country. And there will be a focus on revitalizing the economy. And we're seeing those especially with a new mines minister who has laser focus on pushing forward the energy transition in Colombia. So we're seeing a lot of indications, and that's what we really want. We want to see we've gained a very strong support locally. We've built a very strong reputation nationally, and really it's all about getting that political will publicly demonstrated so that we can move this project forward. And considering our current valuation, it would be a massive, when we achieve that, will be a massive catalyst for the company. And in addition to that, we also have the Esperanza project in Argentina. It's in the San Juan district. The last drill hole in the 2018 was over 1% equivalent copper from surface, over 200 meters, and the overall 387 meters. It was ended because that was as deep as they could drill with the drill that they had at the time, a 0.75. Unfortunately, it was 2018 in Argentina, and copper, and it was didn't get the interest it deserved. And we're now in the process of reactivating that permit. I actually was on the phone yesterday with the Minister of Mines talking about we're at the very last step of we had to go out for multiple consultations with 9 different institutions. We've gotten positive reports from every single one and are just waiting for a last report from the local mayor of Hachang to get this project restarted, and have done the groundwork. Have an amazing team that have built that relationship with local landowners, with the local providers, and developing that political will with multiple meetings with the ministry, and really are on the cusp of restarting with only one single report required. This last report, and the minister actually giving the feedback, it doesn't even have to be a positive report because you have 8 others that are all positive. It's just administrative step, and this project will moving forward. And geologically, obviously, extremely compelling with a high-grade copper and high-grade gold overprint in the same Miocene belt, although not in the high Andes, so a year-round production timeline, or sorry, expiration period. So we're very excited that we're at the point of getting that project moving forward. And I think that is the overall, trying to sum this up in 10 minutes, is we have 2 significant projects. Both are very close to achieving significant catalysts that are transformational. And I can't believe in a better time of being able to get into the space with that's highly leveraged to create significant value for our shareholders.
All right, that was great, Ian. Just a quick question. As I recall, when we spoke, I think the one and only time we met, you live in Colombia, correct? And you speak the language. You speak Spanish.
Yeah, that's correct. So I've had, of my 25 years, 15 years are living and working in South America, and I'm fluent, bilingual in Spanish. I'm currently, although I'm in Vancouver today, my home is in Medellin. I think it's taking that knowledge of the projects and the experience learned on actually getting projects across the finish line. It's important to be really hands-on, and so maybe I'm not as good at presenting, but I'm very good at working and understanding the details of how things work in South America to drive these types of projects forward.
All right. Well, you hit on a lot of key points there. We thank you for your time today, and we'll see you soon.
Thanks, Mark.
Okay, that's Ian Harris, President and CEO at Libero Copper and Gold. Our next guest is Lawrence Ralston. He is the President and CEO at MTB Metals, formerly Mountain Boy. Great to see you again, Lawrence. The floor is yours.
Thank you, Mark, and hello, everybody. Appreciate your interest in MTB and the copper space in general. And there we go. Perfect. So I'll get right. MTB is on the verge of confirming a very significant copper gold discovery in BC's Golden Triangle. And of course, everybody knows about the triangle. You may not be aware that the majors have invested $5 billion in this region over the last 3 years. And the other important point about the Golden Triangle is that it's very renowned for gold, but it also has a lot of copper. And in fact, most of the gold content in the deposits in the Golden Triangle are actually hosted in porphyry copper gold deposits. But the gold content is so high that they're considered to be gold deposits. Now, there's a lot more information in this presentation than I can deal with in 10 minutes. Anybody that wants a copy of this presentation, let me know, and I'll get you to. Now, here's just a quick snapshot of some of the porphyry copper gold deposits in the Golden Triangle. And you can see that even though they're billed as gold deposits, there's a massive amount of copper. The KSM deposit, for example, has 54 billion pounds of byproduct copper, and that copper resource is in the same league as El Teniente, one of the biggest copper mines in the world. And so far, the Golden Triangle has outlined about 90 billion pounds of copper. The region is quickly emerging as an important copper region. Okay, back to MTB. We have actually 7 projects in the Golden Triangle. One of the largest property holders up there, 700 square kilometers of mineral rights. I'm going to talk exclusively about this one project at the north end here, Telegraph. And just jumping forward. A lot of good people, great geological team, young, powerful group committed to success, great, ESG record. We've got wonderful relations with communities. We get permits when we apply for permits. Um, but what I really want to talk about is this Telegraph project. We're immediately adjacent to the Shaft Creek deposit of Teck. We're just north of Galore, which is a joint venture between Teck and Newmont. And very soon, Newmont will own the Red Chris mine when the merger with Newcrest is concluded. And a couple of years back, Newmont bought the Saddle North deposit. So beyond just being a fantastic neighborhood, we have exactly the same geology as these nearby deposits, and we have growing evidence that we have a major deposit in line with those deposits that are close to where we are. Now, for anybody wondering how a little company like this was able to pick up this huge property position in such a highly prospective region, the short answer is fractured ownership. Going back 3 or 4 years ago, we set up a program deliberately going out, sifting through all the bits of information that had been collected over the years by lots of different operators, looking for opportunities like this one. So here's the area now comprising our MTB, our Telegraph project. And you can see that moment in time, there were a lot of companies looking at it. All of these companies, and this kind of pattern continued for a couple of decades. All of those previous operators were looking at their own little piece. At the end of the day, they came up with 35 separate mineral occurrences, min file occurrences in the provincial government records. Now, when we looked at all those bits of information, it was very clear that this is not 35 separate occurrences. This is one humongous geological system. So just to give a scope of how large this system is, we're just looking at the central part of our Telegraph claims here. And these are all internal claim lines. This is all ours. Saddle North deposit that was purchased a couple of years ago by Newmont. So the outline of the actual deposit is about here on the same scale as our Telegraph project. So we've got a lot of scope here for something pretty significant. And if we look at the same thing with Galore, again, on the same scale, we've got scope for a very significant deposit. Now, for the next couple of minutes, I'm going to talk about this little piece of what we call the DOC trend. Our DOC trend encompasses about this amount. We're drilling on this piece of it right now. And, a lot of great work was on this property over the years. We've been able to pull together all the raw data, process all that information, and look at it for the first time. In 2014, there were 2 drill holes that came out of that previous work. Our interpretation of those holes is that they were on the periphery of a significant porphyry system. So the challenge for our team was looking at this massive geological system and trying to figure out where the heart of that porphyry is. And one of the tools that we employed was IP, induced polarization geophysics. We did a survey in this area where we found a lot of copper on surface. That's where those 2 earlier drill holes were drilled. We looked around and find the heart of the system. What we're finding actually is this is probably, no, not probably, it's almost certainly a cluster of porphyry centers, which is similar to these deposits around us. They're actually clusters, and we're seeing that very definitely. Just to give a sense of the topography, it's friendly terrain. This is Dock Ridge. The drilling was just over the ridge to the right. And we actually used 7 criteria pulling together data sets from all these different previous workers. We outlined along this dock trend multiple target areas based on those 7 criteria. The 2 drill holes up here, we started off the first hole fairly close to the existing holes, giving us a firm starting point. We were absolutely ecstatic by what we saw in that hole. Copper mineralization right from the top of the hole to about 400 meters, significant copper. Now, we were really reluctant to talk about visual, grades. We certainly haven't talked grades, but to talk about visuals. But we've got an XRF on site. We're seeing readings giving us the confidence that this is real. There's a lot of copper in this system, and we're feeling very, very confident about what we're seeing here. So again, this is showing the geochem along the same trend. These targets are all based on the alignment of up to 7 criteria. Our second hole, which is now underway, going well. We're seeing exactly what we want to see in the hole, and it's 2.5 kilometers away from where the first hole hit that significant copper mineralization. So we're very, very excited about what we're seeing here. And beyond this little piece where the drilling is taking place and the bigger dock trend, this is a huge property. We've got an enormous amount of mineralization. The strata trend, the Yeti trend. At Yeti, in addition to all the copper, we're seeing up to 60 grams of gold, up to 1,500 grams of silver. We're doing a little bit more work on these areas, but the focus is going to be drilling that. Just to put the scale of this in perspective, this is the KSM deposit, Kerr, Sulphurettes, Mitchell, Iron Cap. There's the stats on it. I'm not suggesting for a moment that we have a KSM, but it's interesting to see the scale of the footprint of the geological system that we have here. Now, a lot of this, as you can imagine, we're focused on that one area. We're going to continue our drilling program. We've announced yesterday a $1 million top-up financing that's already been fully placed, and we're expanding the drill program. We're going to do more IP. We're going to do other geophysical techniques, and we're going to do work on Strata and Yeti, and 6 other projects in the company, drilling on at least 2 of them this year, and huge news flow that we're going to see coming up over the coming weeks and months. So I'll leave it there. As I say, glad to share this presentation, and look forward to any follow-up discussion or questions. Thanks. Back to you, Mark.
All right. Thank you very much, Lawrence. You wrapped it up just on time there. So nicely done. We appreciate that. We'll see you soon. Lawrence Ralston, President CEO at MTB Metals. Let's move along now. We have 2 more presentations for you, and then we're going to have a panel, a Q&A session with 4 of our guests. Right now, we have Matthew Wilson, CEO at Sterling Metals. Hi, Matthew. The floor is yours.
Hey, Mark. How you doing? Can you hear me okay?
Yeah, we got you.
Perfect. All right, great. Can we see my screen? Perfect. So look, thanks a lot for everyone for taking the time. We're all here for copper. I think one of the things that became really interesting to me over the last little bit in looking at different deposits, we're all talking about how there's not a lot of supply in the future, the demand that's expected, but the powerhouse that is Canada only holds 1% of global copper reserves right now. We still think of it as the monster, all the financing for mining, the majority of it goes through Toronto, and yet here we are supporting all these battery plants, but not a lot of copper in the ground here right now. So really a good place to be for new discoveries, just when we're thinking about strategic assets. And we think that to find these new discoveries, find things that are of the scale and grade that can lead to decades of mine life, you need to look in new places. And so we are looking in the middle of Labrador. We think we have all the 4 key things that lead to the ability to put a mine into production, especially something we're talking about that is very large. Big thing for big thing for finding something large and that can make an impact on the global copper reserves is finding the right rocks. So what we have here in Labrador is not a lot of exploration. It's a tough country. And you see a lot of the great stories we've heard today are in prolific copper belts or in areas where there's lots of exploration. Well, Labrador has not had a lot of exploration. It's tough. There's helicopter access. But despite that, you have some of the world's monster deposits here. You have Voisey Bay, about 200 kilometers north of where our project is. You have these giant iron mines, which are all kind of symbolic of just the rocks being right. The great belts in the world, when you look at South Africa, when you look at Siberia, the east coast of Australia, I mean, pick a commodity and you're going to find a monster. So really, you need the rocks to be right to be able to put yourself in the position to succeed in finding large scale deposit. On the left there, you're going to see these 3 crustal breaks. Those are the black lines. It's the collision of these 3 provinces, basically big holes in the ground that allow for good fluids to flow. And where the Adeline project is in the middle of that green area, the copper, a lot of similarities right here in the way that the structure of this basin puts itself together to the Central African Copper Belt, which is one of the great areas for copper discovery over the last several decades. As we continue in the grander geology sort of theme of the macro of big rocks, we positioned ourselves in a pretty good place. Grenville origin, go back to Virginia, and you see that the White Pine Keweenawen on the left side there, and our project, which is in Seal Lake, is right beside each other, same age range, and that was actually responsible for most of the majority of the production of copper in the U.S. in the 1900s in the White Pine Keweenawen area in northern Michigan, and you'll see the same age range as well in the Katanga, the Central African Copper Belt. So again, looking at really good spot to be in the world for a big copper project, which is what we're looking for. To find a big copper project, generally you need a lot of copper. What we're looking for is a sediment-hosted copper basin. We own 100% of this 44-kilometer basin. Right here is an image from the government of Newfoundland and Labrador. Forgive the fact that there's no legend on here. There's been sporadic exploration over the last 60 years in this area in the middle of Labrador. But even with sporadic exploration, you've got over 250 copper showings that really track that green area there, which is the Adeline Island Formation. And so you've got lots of copper to show that there's a very strong system. Again, we talked about the right age range, and the sulfides that you're finding in this system, chalcocite, boronite, chalcopyrite, are what you want to find when you're looking for big systems in the sediment-hosted kind of way. So we've seen a lot of different porphyry targets talked about today. That's really, I've spent about 15 years investing in these different things, and porphyries became very familiar. Deep vertical structures, big holes in the ground, or big underground operations. Sediment-hosted copper a little bit different, but represent still 20% of the world's copper production and reserves. When you look at some of the giants in the world, they really distinguish themselves because of the grade and the same kind of contained copper. So I talked about the White Pine mine in northern Michigan. White Pine was responsible for 133 million tons in reserve at 1% copper from this 4-meter on average seam, essentially, of copper that traveled for several kilometers. You go to the Uticon mine in Siberia, is the 3rd largest copper reserve in the world, 1.2 billion tons at 2% copper. And so you're talking about things that have the same kind of contained copper when you think of the world-class copper deposits in the world, but grades that are significantly higher. And so if you're able to find one of these things, it just becomes a whole different ballgame. Again, the difference between sediment-hosted copper projects and porphyry projects is really, one of them is vertical. These porphyries, if you think of the grades like Philo, you're talking about 1,400-meter holes. And I think their last one was 1% or 0.5% copper equivalent. But in sediment-hosted copper, it's the lateral extent of the basin. So you're dealing with something that travels for very long distance, relatively similar in grade, but you're trying to make sure that the bed has thickness that carries, and so you can mine it from one side to the other. These are samples, again, from the last 60 years, just showing the grade and the different kinds of mineralization. So that seam, that bed averages samples on the western side there up to 5% and 200 grams silver. And then almost 44 kilometers away, you still see 2.5% copper, 5.6% copper in the same kind of rock. Also of note, native copper in that Keweenaw district produced 5 million tons in the US in the 1900s. We have boulders all over the place, up to 40% copper and some big silver kickers. So you've got the right kind of grades. That being said, we are a junior, very hard, and the result of this sporadic exploration, very hard to key in on something without a starting point. Luckily, in 2011, there was a drill hole intercepted 7.9 meters at 1.76% copper and 56 grams silver up at that Ellis target. You'll see that box in red. And why that's so significant is if you think of the context, those deposits that I showed before. So one of Ivanhoe's projects, the Kamoa sediment-hosted copper project, actually, if you go on the Ivanhoe website, you'll see that the way they present their resource actually is it's 55 kilometers square, 760 or some million tons, 2.67% copper, and a 5-meter average vertical thickness. So you're dealing with something very different than what we're used to here, but that is very prolific and obviously something that is just a giant in making. This drill hole, the sulfides within the drill hole are almost invisible, very hard to see. You almost need a VG lens to do it. 1.76% copper, 56 grams silver, and 8 meters. So you've got the right kind of widths and the right kind of grades. On top of that, what we were able to find and layering the data of the last couple of years is that you've got an IP anomaly cut by Noranda back in the 90s that lines up quite nicely with the historical drill hole. Why this is so significant is because when you look at the largest of the sediment-hosted copper projects, such as Uticon, you end up having kind of a two-prong approach to mineralization. You have that bed that travels a very large way, but then you also have these blowout zones where you have these cross-cutting structures which are made up of very microscopic quartz veins, 1 to 3 centimeters in thickness, where the chalcocite and bornite kind of all bleeds out, and you get these blowout zones, which make very nice ore bodies and open and are quite open pittable. There's a volcanic version of it down in Chile called El Soldado. The ore body that we were kind of chasing in that IP anomaly would remind us something like this. You have the mineralized bed, and then you get these colliding structures, and you get these kind of core areas where you have chalcocite and bornite, your highest grade, chalcopyrite and bornite, and pyrite and chalcopyrite on the edges as kind of your marker. What's great is that we have all of those things in and around the IP anomaly, and that's kind of the two-prong approach we're taking to test this 44-kilometer basin. And in our inaugural drill program, which is happening right now, the idea is to test both the width and the consistency of the seam as we step out 200-300 meters, but also to see if we have these blowout areas where you can find these nice juicy ore bodies close to surface. To highlight just where we are again, I think that it is really worth, we've had a couple of presentations. Foran was talking about how great it is to be in Saskatchewan. It is very great to be in Newfoundland and Labrador. The government here is incredibly supportive. Further to that, we have a really good relationship with the Innu First Nations who are supportive of what we're doing pushing forward. And we are also 150 kilometers from Churchill Falls. That's very important when you're dealing with something of this size, given the fact that that would be 100% green energy, and it's the second largest hydro plant in Canada. We're 80 kilometers from the road that actually goes up to the dam for Churchill Falls. So while it might be a little bit difficult to explore the first little bit, actually to build a mine here would be extremely favorable as the infrastructure is quite good and the jurisdiction is very favorable. I think that don't listen to me on this. I've been doing this for 15 years, spending time investing in these sort of things, but our technical team is first class. Dr. Neil O'Brien on the board of NGEx, Senior Vice President of Lundin Mining for 15 years until his retirement in 2018. And prior to that, GM of Kamenko. Goes around the world with the CEO of NGEx talking about giant copper systems, is consultant with Philo, really knows this sort of thing in the macro, and a lot of the macro ideas here came from him. Jeremy Niemi took Noront from 2 to 20 million tons, which was recently bought by Wailu. It's up in the Ring of Fire. If you can work in the Ring of Fire, you can work basically anywhere. So a great person to run operations here and a really good history of moving things forward. Just quickly, we have 112 million out. I think our stock is about 11 cents. We have raised $6.5 million in April. Going to exit our 2,000 meter program, which is aimed to test these two things. With about $4.5 million, so still well cashed up and with lots more data to go. So look forward to presenting some of these results as we push forward, and thanks very much everyone for the time.
All right, Matthew, thank you very much. You tell a compelling story. You're going to stick around for the panel, so we will see you shortly. That's Matthew Wilson, CEO at Sterling Metals. Our Our last presenter is Sean Wallace, CEO at TORQ Resources, a company with 3 projects in Chile. Hi, Sean. How are you? Take it away.
Oh, thank you very much. Okay. Hi, man. Thanks, everyone, for taking the time to listen to TORQ Resources' story today. Certainly, we're very bullish on copper, and we took that view several years ago after a group of us had sold a company, and we were sitting there wondering what we wanted to do with ourselves. And I've been doing this for about 35 years, and I was fortunate enough to work on a lot of these big gold, copper, porphyry deposits. And my partner, Mike Hendricks, and I, we always wanted to get into Chile. It's a difficult country to get into. We wanted to get in for the obvious reasons. The jurisdiction is sort of home to some of the great copper deposits on the planet. All the major mining companies are there of note in the copper space. And it's also a significant producer of gold. So for both personal curiosity and accomplishment, and also we thought we could create a lot of value hunting for elephants in the elephant country. So off to Chile we went. A pandemic hit, made it very difficult to put together the deal. Projects aren't generally held down in Chile, at least the ones you want to be associated with in junior companies and so forth. So we had to sort of find a different way to access the quality projects, the ones that hadn't been drilled by 3 different juniors already, or presented some sort of opportunity for us to create the kind of value that we like to. We were fortunate enough to acquire 3 projects, which I'll get into here shortly. But in our flagship project, the Santa Cecilia in particular, is well situated. So here we go. So the Santa Cecilia project is nestled between the Norte Abierto joint venture, which is held by Barrick and Newmont, and that's the Caspiche and Cerro Casale deposits, and a couple other there. And then between all of them, there's about 50 million ounces of gold there, 18 billion pounds of copper, and some moly as well. And here sat Santa Cecilia for all these years in the inventory of a very storied sort of Chilean mining entrepreneur named Mario Hernandez. And he had this project for years and years. He had optioned it in the late 80s to Goldfields, and they went in there and drilled a bit looking for high-grade gold, the sort of stuff they were at that time they were finding at El Indio and at Pascua de Lama. And there was an epithermal gold system at the top. Nobody recognized the porphyries yet, because at that point, Caspiche and Cerro Casale hadn't been discovered. So fast forward now to 2012. So all the work halted back in the early 90s, 80s, and the thing sort of sat there frozen in time. And, Mario could hold it because he had the ability to do that. He owns NSRs on some of the great mines of Chile, having been the person who discovered them. And so there it sat. And then in about 2012, after Caspiche had been discovered, after Exeter had been up there doing its thing, Mario said, well, I may have a porphyry on this thing. So he drilled a hole and he got about 925 meters of about 0.5%. Then after that, he did this fantastic geophysics program, which is sort of backwards for those of us who do this sort of thing. And it really showed these massive porphyry centers, massive porphyry bodies. So that's sort of the state the project was when we acquired it. It took us a couple years, and it was fantastic. We just completed the first portion of the first drill program, and we managed to step away about 700 meters from that big intercept, and we drilled it cross structure, so we didn't get the same width. But this hole of 557 meters you see referenced up here, the gold grade increased about 78% from the original hole. And so that and a number of other geological features tell us that we're getting closer to that economic center that all these porphyries had, that sort of intrusion, the causative intrusion where all the metal comes up. And it's really the tenure and the quality of that, how that stays together really dictates how big these porphyries get, how much of the wall rock type mineralization, which is significant here. You can see, again, we had 900 meters of about 0.44 equivalent. So that's what we're off doing. We're going to resume drilling in the fall. Secondly, we have the Margarita project. Now that's located down on the coastal Cordillera area. It's fantastic. It's actually was our country entry asset while we were trying to, get our credibility in the country, get set up. It's, for those of us who do this, it's very expensive to go into a new jurisdiction, particularly when you can't fly there yourself. And so we acquired the Margarita project and it's great. It's between Manto Verde Candelaria, IOCG sort of zone, and it's fantastic. It had great copper on surface, but that's not why we're there. We were drilling to see what sort of the cause of the sort of smoke, if you will, the surface mineralization we saw. So in our first drilling program, we managed to actually make a new discovery. We drilled about 90 meters, a 0.94 copper, but really surprisingly was the 0.84 gold. And we joked around the office that this isn't an IOCG, but IOGC. So anyway, at any event, we're presently drilling on our third round of drilling there. Very, very exciting. We look forward to putting results out about that. Thirdly, we acquired the Andrea project. I'm not going to discuss that too much. Again, this is another go up onto the El Indio belt and see what the gold copper porphyry potential is there on a belt that hasn't really seen a lot of focus on that type of mineralization. We know for a fact, because the porphyry's daylight on the Andrea project, that there is mineralized porphyry there. But due to the amount of activity we're having at Santa Cecilia and Margarita, we're going to defer doing any significant exploration there here for this year. A little bit about the company. We got about 110 out, 130 fully diluted. That number is a little bit stale. We have about $4.5 million in the bank. Notably, if on our share register, the Goldfields came in for $15 million dollars Canadian at $1. We were trading about 65 cents then, so they paid a nice premium and received no warrant. For that, though, you don't get something without giving something. We gave them the right to maintain that 15.05% ownership in any sort of subsequent dilutionary events. If they fail to exercise that right on 2 occasions, then that right goes away for them. But it's been a fantastic relationship thus far, and we look to continue support from Goldfields. You can't really talk about a company, particularly in this sort of speculative space, without talking about their team. And I'm not talking about people on the left who we sit up in Vancouver and put our name on the news and take all the credit. I'm talking about the people that grind it out every day, all day down in Chile for us. And, I mentioned one of the challenges for us putting this together was we did it during a pandemic. So you couldn't really bomb expats into down to Chile to sort of do things the way we had traditionally done, in Africa and other countries where, you didn't have an option of utilizing local people to the extent that you do, say, in a place like Chile. And boy, are we ever glad we're there. Our team down there, led by Waldo Quadra, who's worked for every major mining company as a GM, been part of discoveries, permitting, construction, and production. And although our particular place on the food chain is simply the discovery, and then we look to exit with a premium takeover from a major mining company, that's our core competency with the TORQ company. But it's great to have someone who's seen it right through to production. And Javier and Piotr and Luciano, all these people, they brought together a team, this suite of professionals that can get a permit, deal with the ESG, get a community agreement in place. They've kicked over every rock on every deposit all over Chile. Every one of them has minimum experience there, I think, is nearly 30 years. So it's just been really fantastic having people to work with who essentially mirror how we would do things ourselves. Again, the Santa Cecilia project, just a little bit more granular look at it. It's located right, as I mentioned, between Caspiche and Santa Cecilia. I'm going to go through these a little bit quickly because I don't want to run out of time. Again, we have finished drilling in March. We've announced those results, and we're going to resume here when Chilean winter ends here this autumn. You can see the outline of the porphyry centers. After we acquired the project, and that was just late last year, we were able to get our boots on the ground. And again, this project had been frozen in time, so no modern surface work had been done. Nobody had gone and said, well, what else is available here? And this the Caspiche project over here on the right hand side, it says Norte Abierto. You can tell that this is the same mineralizing event. This is just one massive mineralizing event, and anyone who's worked on these porphyries knows they generally happen in clusters. The rocks, we know for a fact over at Caspiche are identical in age, alteration, and that sort of thing to what we're seeing at Santa Cecilia. So it's just a matter now of finding the economic center of gravity. We know we're going to find million ounces of gold. We know we're going to find billions of pounds of copper, but really that doesn't get you anywhere until you find the grade. what makes it all work, what pulls it all together. So that's really what our team's focused on doing, and we feel like we're onto it now. Our first 2 drill holes brought us much closer in both the strength and the nature of the alteration, the mineralogy, and again, having the benefit of having a next door neighbor that's already done this exploration. I think we're going to be able to arrive at an answer about this particular project much quicker. We've got 5 porphyry centers to discover. We've only got drill holes into 1 of them thus far. The cartoons are great, but a picture is worth 1,000 words. What's the end goal on this thing? Well, I don't like to buy something if I don't know who I'm going to sell it to ultimately. This is the kind of project, the kind of opportunity that really moves the needle for major mining companies, as evidenced by the fact that Newmont and Barrick are right next door. You've got Goldfields who want to be involved, et cetera, et cetera. You can see here the Caspiche project located is in our Pircas Norte and the other projects. And where we're standing, where this photo is taken from, is from the drill stem on the drill hole that we just released. So it's very close, gentle topography up there. People often talk about there could be operational synergies. I think that this picture shows that there are excellent operational synergies. So in other words, if we find something up there, it could be something that could be a lever to what it already has been proven to feasibility levels over at Caspiche and Cerro Casale. So here's a little bit more of our drill holes. I'm not going to belabor it too much in the deference of time, but here I'll just like a little bit of the scale. On this particular slide, you can see how the grade, just the intensity of it, the consistency of it, and that's 700 meters apart between the one that sort of faded out on the far right to the one to the left, and that's precisely what you wanted to see. So we're going to continue stepping out on our high grade vector, where we believe the grade is going to continue to increase, and we believe this is going to be a fantastic drill program when we get going here again in the fall. Again, this just shows you that the porphyry, it's also open above. So in other words, we're going to take and drill from some different angles, show that this thing comes close to surface. There's been some fantastic other projects out there that are that people are drilling some excellent grade and widths, but they start awful deep, some of them, and we're very fortunate that we have porphyry that surfaces. Again, this is just another look on that. Now I think with the time left, I want to talk about Margarita, where we're currently drilling. Again, as I mentioned on the onset, this is an IOCG, a little bit different. But again, there are mines in our neighborhood here operating, profitable by great companies. I think this is more of a target that would be something we would sell to more of a mid-tier company. This would be more impactful, whereas Santa Cecilia is definitely a major project. The type of
I hate to interrupt. We're pretty well at time. If you just want to wrap up your thoughts there, and we'll get to the Q&A.
You got it. Margarita, we're drilling right now. It's going to be exciting. This is our 3rd drill program. The first one made the discovery. The next one traced the mineralization over about 800 meters, and we're looking to make that bigger and exploit the other targets. TORQ trades on the TSX Venture under TORQ, and we'll be generating an awful lot of news excitement over the next year. So please stay tuned. And if you have any more questions, don't hesitate to reach out to us. Thank you, Mark. Sorry, I lost track of time there.
Not a problem. Thanks for that. And you're going to stick around and be part of the panel. Sean Wallace, CEO of TORQ Resources. We're also going to bring back Matthew Wilson, Sterling Metals, Pierre Leveille, Deep South Resources, and Morgan Leckstrom from Blackwolf Copper and Gold. And gentlemen, I want to ask a question here to start off with, and I'll start with Pierre. This is a general question. I'd like to get each of you to answer it, if you could, as we hark back to some of the comments from Tim Lee, the Red Cloud mining analyst off the top, who gave us a nice little succinct overview of copper and its outlook short term and going out about a decade or so. So as you look at the short term with China meaningfully slowing, for example, and balance that with the long term and know that we appear to be coming into twin deficits, really, copper concentrate in a couple of years, refined copper maybe in 27 or so. What is your outlook? And I'll start with you, Pierre, because you were the one who said that you think the next 30 to 50 years, period, copper is the one, is the commodity you want to be in?
The yeah, the short term potentially does not look as great as the the mid and long term, but you see, China is slowing down. News from China are not so good, and copper price is not going down. It remains quite stable. It's not so low either. So there's room to grow. There's room to come from that point. There's something very important also to keep in mind. Yes, even if China is slowing down, there's less and less production. Supply is going down also. So and there's not enough new number of mines that will come online to outbalance that. So at some point in time, there will be a shortage one way or the other, even if it's slowing down in China.
Who wants to jump in?
Yeah, I'm happy to. Certainly, I'm no metals analyst expert. We find the metal, and for us, what our outlook is governed by supply deficit. Really, I think the demand will wane and increase. I think overall, taking a long view, and particularly because these projects take years to find, years to get permitted, and years to build. So, and those timeframes are stretching. I've been doing this for 35 years, and you used to be able to get a permit in 2 weeks to go drill. Now it takes 6 months. I mean, every single thing is harder and takes longer and is more expensive. And so that takes care of the supply side of the conversation. And I think that demand is a no-brainer. There may be periods of time where countries stumble a little bit, go into recessionary times. So you take 10, 30 to 20, 30 year view, and I think it's a no-brainer. Copper is becoming more scarce, and we're inventing new uses for it. So we're very comfortable being in the copper.
Do any of you think that this concept of the demand outstripping supply well into the next 8 to 10 years or so, that maybe that's being overplayed? Is there any possibility that enough new mines will come on that the supply-demand scenario will not be as dire as some are predicting?
Yeah. Go ahead, Matt, if you want to.
Yeah, I was just going to say, I think that it reminds me a lot of peak oil, right, in the 70s. So, I mean, like, yes, I agree that the copper outlook is, of course, I agree that the copper, we're all sitting here touting copper, which is great. I think that there's a lot of low-grade stuff in mines that perhaps aren't being mined. I think like the argument was there for zinc for 40 years off and on. And it was like, well, there's never going to be enough zinc. Zinc price is going to rip. And then all of a sudden there's always enough zinc as a byproduct. And so I think that the demand is great. Your China point, I mean, I think they were second in EV production in the world. And there are great arguments for that for sure. I think that the argument that I think is worth focusing on is there is a shortage of good, long-standing, long mine life copper projects in the world, right? So when you look at the discovery curves, like what's missing are the new Escondidas, right? I mean, the Vicuña district carries such a premium because you have these really high grade, long mine life, and we kind of underestimate sometimes in the sector the impact it has on communities, right? You're looking at 10-year mine lives, and the community says, well, forget it, because in 10 years we're going to have this ghost town. And I mean, we've all been through mining towns, and you're seeing that. So you need things that have long mine life, that can last through different copper price cycles, and like that can be company makers on their own. And so I think that that's really the shortage, perhaps, that I focus on.
I think just to interject a little bit there, when you talk about shortage and exploration in companies, one thing that I think isn't focused enough on is the major producer. I mean, look at Codelco right now out of Chile. $19 billion of debt, ballooning debt situation, state-owned, and on the brink of insolvency. So when you talk about the need for more copper producers, if you have one of those majors go under because they're in debt, because they've been wearing the ups and downs in the market for so long in the development phases, you actually create a situation where the demand could spike very quickly. And that, like, the demand's not going to change, but the supply could actually shrink very quickly. And let's not forget that the other major supply shortage, and I love talking about this, is because it has to do with the human capital side. I mean, there's some young people on this call, and there's some people that have been in this industry for a long time. And I'm sure you can see that the industry isn't exactly isn't exactly the most interesting industry people are going into now. They're going into crypto, they're going to all these other things. So you're starting to see a supply chain shortage of the people coming into this industry which means that the more mines we want to put online, we're actually going to be short. We need to develop new technology, which again puts more demand on copper, urbanization. I think one of the interesting things for me is I just put it to Chat GPT. One of the ladies on the phone, she says, whatever you do, do not answer from Chat GPT. And I said, well, let's see what Chat GPT has to say about copper demand. And it was interesting. It had 5 points on copper demand, and it's the typical, electrification and all that. But it said there could be an inversion for a slight amount of time. And I was like, wait, what? And it has to do with that we still are outpacing, the demand is outpacing the supply. But you're right, Pierre, when you're talking about China's development process, there will be a slowing, and we will have somewhat of a recession or a soft landing, as the governments like to call it. Or a softer, harder landing. But that inversion, when it happens, I believe it'll be a quick bottom and a rip right back up. And those of us that are looking for these copper and these porphyries and making discoveries and taking things to the production level, the shareholders will benefit from that outlook. It's contrarian, a lot of people say, is what wins. And I know our main backer, Frank, talks about being contrarian all the time, and it's worked pretty well for him, so we're trying to follow that a bit.
One little point I can add also there is that when you look at the majors, they are more and more aware that it's more and more difficult to find and build new mines with high grade. Yeah, we're all looking at lower and lower grades, and you can see now that what has never happened before is that majors are investing vastly in technologies to mine or to extract metals. They are looking at different technologies of leaching, including bio-leaching. BHP, Freeport-McMoRan, Rio Tinto are putting a lot of money, hundreds of millions of dollars in testing these new technologies. Why? Because they understand that they will have to mine low-grade deposit more and more. And if they want to have large tonnage, they will be stuck with low grades. So let's mine low grade and have extraction technologies that will make it happen. So that, in my view, that's another sign that shows that the supply is going to go down. One way or the other, it's going to reduce.
And what about jurisdictionally? I'm generalizing here, but we have seen a number of coups. We've seen populist governments, populist leaders. Are you concerned that the deficit could be even more exacerbated if these things keep happening over the next many years?
It could happen. It has happened before, so it's and it has happened quite significantly in the past 10 years. So you won't be surprised it can happen anywhere, and we have to be prepared for that. It's I'm not saying that it will happen in our country, in Namibia, but we had our own challenges in Namibia, and I'm sure the other companies have their own challenge with everywhere where they are. And just look at North America, the time it takes today to have permits. Just that, it's very long. It makes our life difficult, more and more difficult. So it's not only a question of coup and unstable countries. It's also a question of more and more bureaucracy. It's more and more difficult than ever. So, we have to be prepared for that.
Sentiment too. I mean, Pierre, you hit it right on the head. The sentiment can be as powerful as a coup for mining, right? When we look at this, we've all seen this. I mean, been at conferences where, you talk to someone that really doesn't understand where things come from, and they go, well, we don't want it in our backyard. It's like, okay, well, hold on. Let's make permitting really difficult. That is more powerful. Those political gestures and the almost NIMBYism that comes from that, in my experience, or in my opinion, is more powerful than an overthrowing government, because those don't tend to last long. Yeah. They're very short. That being said, the concentration on critical elements, the coppers, the zincs, the nickels, because of the green transition, I really do think will open up some of those permitting windows very quickly. And you're starting to see that in the US, starting to see it in Canada.
Yeah.
Yeah, Morgan, and also like COVID really put it into focus that it's not even always just the jurisdictional risk. It's just that everyone is, you're entering kind of a new era where it's like we want to control our supply and ensure that we can look at the investment Canada is doing in battery plants right now, working with different car companies, pushing forward the lithium assets in James Bay, right, so that they can supply, Stellantis and VW in Ontario and in Quebec. And there's a huge amount of money. And last I checked, you need copper to turn lights on, and you need lights in electric cars. So I think that like there is a focus in critical metals that pushes us forward. And so if you're in a place that supports that, I do think that is favorable. And it's just making sure that you have the metals you need to be able to compete in the next kind of push of globalization, of industrialization.
A gentleman, Pierre, mentioned challenges. So why don't we go around the horn here, so to speak? And again, we'll start with Pierre to kick things off. But whether it's external challenges or internal challenges, what would you say is the one challenge for your particular company or obstacle that you really need to overcome in terms of executing on your plan?
That's a quite interesting question, but I would say certainly, what we have is a pretty low grade project. It's a large tonnage. It can even double in tonnage, but we have to prove ourselves and show investors and large investors that we are on the right track to have a very significant deposit that can become that is near to be able to become a producer. So that's probably our main challenge. The second challenge is also to convince the politicians in Namibia that we're going on the right track, because the political situation makes that there's always a lot of politicians that don't understand anything about mining, but they dream that there will be a new mine in their backyard where they will be able to create employment. And so you have to slow down or manage their expectation, and that sometimes is a bit challenging. It's not like this in every country, of course, but it's the case where we are.
Who's next?
We're talking about biggest challenges here.
Yeah, exactly.
Yeah, I think so. For us, I mean, it's finding it. I mean, we're as early stage. We have one drill hole we're building off and 60 years of work and a terrific team that's putting things together. We kind of have a lot of boxes that are checked in terms of what happens when we find it. But like any early stage company, and anyone who's been in this for long enough knows, like all the rocks have to cooperate at some point. So that is without a doubt the largest challenge for a startup. You're always capital deprived. You got to make sure that people understand what's going on. We're all sitting in a sector right now that is not exactly getting a huge amount of love, as anyone that's on this kind of understands. I mean, like the macro might be there, but you're always dealing with struggles in financing. You're always dealing with struggles in kind of putting your initial resource together when you're at our stage.
Morgan or Sean, biggest challenge? Anybody want to take
Sean,
that?
You're muted. Sean, you're muted.
I think you're muted.
Sorry about that. Yeah, sorry about that. Yeah, I would build a little bit on what Matthew was just saying. It's more the capital markets. For us, we're very fortunate. We're in Chile, so we don't. I think that's a jurisdiction that's been tested recently with the referendum on their constitution, et cetera. It was a brilliant show of democracy at work, really. And so we're very comfortable with all that. The difficulty really is, as our project's evolving, the market's not evolving with it. So I have to weigh, for our project, it's big. So I should be out raising $50 million and putting 5 drills on there and pounding this thing the way it's supposed to be. And that way, because it costs, all our fixed costs are the same. And the more you can drill, the better efficacy of the use of capital. And that's a big metric we use around our shop. So I'm not happy. The biggest challenge right now is getting that efficacy of capital metric to somewhere we like it. 85% of the money should be going in the ground, because that's what shareholders, investors give us money to do, is go find metal and create value. Well, we're bringing the good projects. We're doing the good work in the jurisdictions. We're making new discoveries, and the stock provides liquidity for those who want to carry on and do something else. So that, for me, would be the biggest challenge in this. And I've been through some tough markets before, but this is a little bit unprecedented today in terms of just the apathy about the space that exists. But one thing I do know, and we can take heart, is that this won't last forever. And when the light turns, it always does. It's there's an old saying that the markets can remain illogical longer than you can remain solvent, and that's never been, I think, truer than today. So the trick now is to try and create as much value as possible without obliterating your capital structure with dilution. That's the biggest challenge.
And Morgan?
Yeah, I don't disagree with you, Sean. I would say on our side of it is, weather is definitely a challenge. We're limited on our drill season, especially at Cantu and Harry. But it's the what's next phase. We're in an area that is starting to be bought up. I mean, you see Newmont coming in by Bruce Jack for $2.8 billion. You're seeing people taking a significant interest in the Golden Triangle that are the majors. So you get in here and say you make a big discovery, like how long are you going to be able to run that for before they take it from you? You know what I mean? And that's not a bad problem to have, but it also makes it hard to pre-plan the future. Like we're looking at our projects right now. And we go, okay, well, we have a resource on Niblack that is fully expandable, but it's going to cost some money to drill it. So I think the biggest, outside of that side of it, the biggest challenge I've seen in the market so far, and I beat this over the head, is sentiment. And that's not, I don't think it's necessarily sentiment just towards, commodities. I think it's sentiment towards risk. And unfortunately, we as the mining space, all of us, have done a very horrible job at telling people we're not a risky investment when we are. But when you have people that have a resource, or like Sean's company there, they need to expand it. And that's something real. When you have something real, we've been in an environment where it's been so risky for people to invest, they no longer understand it. They no longer understand that it's less risky now because we found something or because we have a resource and we can grow that. And, we're stewards of our share structure and our capital. So that sentiment has changed. And the generational change that comes with it is truly been interesting. I mean, when you can sell someone on an imaginary number on a screen more than you can sell them with the rocks in the ground, there's something fundamentally wrong in the investment thesis. And that, to me, fundamentally is your YouTubers, your influencers, the joy of getting out there and say, look at that, I made a trade today and I bought a Ferrari. That happens in the mining space and people forget about it because we never advertise this kind of stuff. I don't know a Ferrari, don't worry. But that people forget about that. People forget that you can have the Great Bears, you can have the Bruce Jacks. And this is starting to become more common because majors are looking to sweep people up. And those investments, so that's a big challenge, is trying to get out there to a different generation that is coming into a lot of money from these, tech sector and crypto and all that, and say, hey, look at us. We are fundamentals to society, but hey, we're a little more risky. We're way less risky than a cryptocurrency. Exponentially less risky. Yet the investment thesis here is different.
I think we could do a whole separate show on that as well. So, Morgan, we'll stick with you. Let's wrap it up here, 30 to 45 seconds, if you could, from each of you. Final thoughts against that backdrop of sentiment and what Morgan was talking about and how your respective companies fit into that copper landscape.
I just be at the forefront. Be at the forefront of it as a company. I put out a Twitter video yesterday, and something 2 years ago, people, why would you use Twitter? Just evolve with the technology and put your face out there and talk about it in a way that just think about, not many people are geologists. I'm not a geologist. Thank God I have Rob McLeod. But just make sure you're communicating. Here's the potential upside. Here's what we can do, and use those platforms because they are some of the most powerful advertising platforms in the world. Coca-Cola and Apple have proven that over and over and over.
Who'd like to go next?
I'm confident it's going to turn around. I'm in this business since a little while. Color of my hair shows that I'm more than 1 year in the business. So, and I've seen all these cycles, and I don't think it's worse than it was before or anything like this, because every time it's the worst time. So it's just a difficult time. And you're right. We have to be at the forefront. We have to be there. We're storytellers, and we have to be very credible storytellers. We cannot pitch anything else than credibility. So, and we have to be there every day and be in the news every day, be in the, do posting, do everything you have to do just to attract attention. And the day that the market will start turning around, then you have not been forgotten. You're in the pack that will be on the starting line first. So it's very important. Some people were telling me recently that it does not give me anything to publish these drilling results that we were having from 2 years ago, because our license was suspended for a period and we received our results after the license was suspended. And I said, no, we need to be in the news it's good news, no problem, let's publish it. And let's show our shareholders and potential new investors that we're active, we're moving forward, we have a very good project, we're credible people, it's a sound project that goes somewhere, so keep going, don't stop. Even if it's difficult, it's going to turn around at some point. And when it will turn around, then we will benefit more than what we benefit now. Right. That's it. So let's keep at it.
And Sean and Matthew, 30 seconds each from you, if you could.
Yeah, sure. I mean, obviously, I think it goes back to what I was saying before. It's just, we got to try and create as much value as possible. I think it is important to be out there. One thing I would caution, and I don't really traffic in this, some people end up needing this trying to attend to everybody's sort of fruit fly length attention spans nowadays. I think, it's important to put stuff out there, but I see a lot of people putting stuff out there that takes away from the story as well. So I think as long as you've got something accretive to say or do and put out there, I think that's great. But sometimes, you look, you're sort of flailing in the wind a little bit if you don't do that. So for us, it's about staying disciplined. Don't worry about the external validation of the market when you're when expiring your team. We know what we have, and the people in the business that know what we have, and the rest of the people will come eventually. And again, I've been through that 3 or 4 times in my career where it felt like it does now for different reasons, but it changed and it was wonderful. So just have to be steadfast.
Last word to you, Matthew.
I'm excited. I think times like this are the most fun because the market is so inefficient. If you have money, that's a great thing. Finding discoveries in this sort of market are still rewarded. And it's one of those times where, the good things still matter. And I think that they're easier to find for cheaper values, right? So, if you're an investor, this is a great time. You should be looking at things and take a look at the last 50 years, cyclical industry. So my last 30 seconds is just, I think this is a really exciting time. I'm excited. I think that we're onto something, but just in general for the space, it's a fun time to be looking at things.
All right, gentlemen, we've taken up a big chunk of your day. We very much appreciate you being with us and presenting on your companies. We'll see you down the road. Have a great day.
Thanks, everyone.
Thanks, everyone. Good luck to everyone.
Bye. Yeah, thank you. Thanks very much. Good luck.
And thank you all for watching. We very much appreciate it. A reminder, you can see a replay of this entire show on the Red Cloud YouTube channel, also on Red Cloud's website eventually, not straight away, but we'll get it up there. We'll also chop up the presentations and edit them into individual segments as well. All kinds of content, again, on YouTube and at Red Cloud on their website. Thanks again for watching. We'll see you next time. Take care.